Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are always happy to have you with us today. Once again, I have my great friend, my great pal. He is always the mastermind of the operation. Al, how you doing today?
You know what? I am really doing well. I feel great. Must be something wrong. I'm feeling really good. I don't know why.
You felt really great last week, and I said you look good. You said you were working out, and I still think you are, aren't you?
I decided to look better this week. Is it working?
No comment. Let's move on with the show. It's always great to be back, helping our Retire Young family make those better investing decisions. Al, we got another jam-packed show, as you said. You know, every single week I feel like a broken record. We had another phenomenal week in the markets. We had some pretty good up days, but some more down days, and sometimes in the same day. So I want you to cover or recap these financial markets and what's really happening and different opportunities that the average investor has. But I also want to get into some other topics like the 401ks, IRAs, how the institutions or how the successful are building wealth. And that's kind of the topic for today is how the successful can build wealth. Before we do that, Al, let's recap these markets. What's happening? What are some things people can look at for the future, but also what are some opportunities that the average investor has?
Well, there's a lot of opportunities, and we always say as long as the market is open, there are opportunities. But right now, we've got a couple of things to concentrate on that are pretty significant. I mean, this coronavirus issue is far from over, and the economy. We're entering earnings season here now. The earnings for this quarter. And we'll be keeping a watch on what's happening there because that's the key. What is this coronavirus issue? What's the impact going to be on the economy? And what's been happening? You know, for a while there, people just disregarded everything, and we're looking beyond it, assuming that we're going to have the economy just kind of resume where it stopped or where it left off back in February when the coronavirus hit. Right now, but now we're seeing maybe a little more volatility. The market now reminds me sort of like a yo-yo on steroids. You know, when you see 1,000-point swings in a day, that's huge. And you know, when you see the market up about 10 points, and then you get a cup of coffee and you come back and it's up 200 points, and then by the time you're done with the coffee, it's down 200 points. But down maybe even more than that. I mean, we're seeing these big moves, so it makes it a little more challenging for people. Unfortunately, what a lot of people do is look at opinions that other people have to make their decisions. And remember, those are opinions. I just saw an article that I thought was kind of interesting by Mark Hulbert in MarketWatch. Hulbert has a company that is called Hulbert Ratings, where he just tracks newsletters and reports what's going on kind of in the markets. And he said this, because a lot of people rely on analysts, the Wall Street analysts, to make their decisions. And he said this, don't turn to Wall Street analysts to get insight on which companies to buy or sell. He says that because these stock analysts tend to be followers rather than leaders. They all too often downgrade a stock after it has already fallen and then upgrade it after it has rallied. Basically, they give new meaning to the phrase closing the barn door after the horses have left. And that's something I've said in the workshops that I do, too, that the analysts oftentimes come out after something has already happened. And then basically everything is already priced into the stock when they do that.
And that's why they're always right, too, because it's always hindsight.
That's exactly right. So the value there is limited. That's what I was getting at. So what do people do? Well, as with anything that you do, you want to find and copy the most successful. Learn how they think and what they do. And I think a great example of that is Kobe Bryant. You know, when he started out, what did he want to do? He wanted to be as good or better than Magic Johnson. He copied his moves just inch by inch.
It was Michael Jordan.
Oh, I'm sorry, Mike. What did I say?
You said Magic Johnson.
Oh, Michael Jordan. Well, he's pretty good, too. They're both good.
Exactly.
But thank you for correcting that.
You're welcome.
Right. But you could superimpose, a film of one of them on the other, and you wouldn't even be able to tell the difference.
Yep.
And that's the key. Follow somebody that's successful. So what we've done, we found the most consistently successful in the financial markets, and then we show our students how to copy them. And why, people need to ask themselves, why do you want to participate in the markets? What's the reason for doing it? Well, the goal is to be successful. And although there's no guarantees that everybody will be, the best that we can do, and this is what we do, we provide the knowledge and the skills and the tools to show people how to stack the odds and the probabilities in their favor.
Yeah, it all comes down to supply and demand. You mentioned earlier with the coronavirus and stuff like that, the impact on the economy. There's a disconnect. So the markets, you were talking about analysts and everything. That's all fundamental information. And when the successful are utilizing price action on a chart, that doesn't lie, Al. So that way you can go based off of facts, not based off opinions.
Yeah, exactly. That's what you want to key in. What is factual? What factually moves the price, impacts the price of anything, whether it's the market in general or individual assets? And what causes price to go up? What causes it to go down? It is that relationship between supply and demand. Basically, what it is it's what you want to look for are the big sellers and the big buyers. They're the ones that are moving the market. That's not you and me, Josh, and it's probably not anyone that's actually listening to the show right now. I'm talking about major firms that are investing, maybe are buying or selling millions of shares at a time.
Yeah, Goldman Sachs, Buffett, those
Morgan,
big institutionals.
Right.
Yep.
And they do it in such a large quantity that it moves the price of something. And what we want to do is help people identify the best price to get into something and out of something. And some people might be saying, well, that's when the company first goes public, when Apple was trading for a couple of dollars a share. Sure, but you can't go back in time to do that. What you can do is find the best price now that gives you the lowest risk entry or exit with the highest profit potential and the highest probability of succeeding.
You're exactly right. It's all about where to get in your investments, but it's also where to get out. It's not just buy and hope it goes up and hold it forever. The successful, they're taking profits in these moves that we're seeing every single day, Al. And when it comes down to supply and demand, that way you have a plan. I know you're going to talk about having a plan a little bit later.
You bet.
But you have to have a plan, a rules-based strategy, and that's what the successful investors are doing. Well, all these strategies and concepts are also available to the public. Al, we got a show here today. We got a lot to cover. So coming up next year, we have a lot of listeners, Al, that want to understand how the successful investors and traders are creating income in these financial markets. There's other asset classes that are available to the big boys, the institutions, that are also available to the public. So I want to get into these other asset classes, some of the opportunities that we have as investors, just like the big boys do. And this is Josh and Al. We will be right back.